Right. 7.1a is completed. Correct? So where 7.1a, where supply includes all forms of supply of goods or services or both, such as sale, transfer, barter, exchange, license, rental, lease or disposal, made or agreed to be made for consideration by a person in the course or furtherance of business. You know each and every word of this clause. Correct? Right. So now comes 7.1a. We already made a discussion with respect to this 7.1a. We will see what is there in the clause exactly. Right. 7.1a. This also includes supplier. Inclusive definition only, no? Right. So 7.1a. So here the activities or transactions by a person other than an individual. Okay, activities or transactions by a person other than individuals. So any person other than individuals. So whether it may be partnership firm, whether it may be society, whether it may be trust, whether it may be club, whether it may be association, whatever it may be, other than individual, whoever it may be. Okay, to its members or constituents or vice versa. To its members or constituents or vice versa. So whoever is there in that association, in that firm, in that society, in that club, whoever is there. So whether the services or goods are flowing from one person to another, that means from partner to firm, from firm to partner, whatever it may be. Okay, for cash, deferred payment or other valuable consideration. Okay, so the activities or transactions by a person other than individual to its member or conscience or vice versa for consideration. For consideration, then what it will be? Then it will comes under the definition of supply. And explanation also, for the purpose of this clause, it is hereby clarified that notwithstanding word has been used. That means wherever there is an order, wherever there is any other controversial section or controversial provision, controversial order, which will prevail, 7.1a will be prevailed. Okay, right. So anything contained in any other law for the time being in force, or any judgment or decree, why it is used? Already there is a Supreme Court judgment against to this clause. So that's why, in order to mitigate that, so notwithstanding word has been inserted here. Okay, right. So order of any court, tribunal or authority, the person and its member or constituent shall be deemed to be two separate persons. Okay, partner is different from firm. Members are different from club or association. Okay, like this. And the supply of activities or transaction interface shall be deemed to take place from one person to another. So there is a supply. You got this 7.1a done. Right, now comes 7.1b. Now comes 7.1b, which is with respect to importation of service. Importation of service. So here there is a relaxation. What is that relaxation? With respect to importation of services, what is the relaxation here? Importation of services for consideration, whether or not in the course or furtherance of business. This is what the relaxation is. So it may be in the course or furtherance of business, or may not be in the course or furtherance of business. Just the importation of service shall be there and consideration shall be there. Even if it is not for the business also, that will be again treated as supply. Okay, that will be again treated as supply. So importation plus consideration, it amounts to supply, no matter the purpose. The purpose may be for personal use, the purpose may be for business use. Importation of services, that means it is talking from the point of view of the buyer or supplier. Importation of service. Importation of service. So from the buyer point of view, from the recipient point of view, it is talking. See here, so whenever we are importing any service, let's say here is an example. Ramaya, a proprietor has received the architect services for his personal residence. For his personal service, personal residence. From where? From an architect located in New York at an agreed consideration of $5,000. This is an importation of services for consideration in the course or furtherance of business. That is missing here because it is for personal purpose. It is not for business purpose, not for business use. Okay, not for their business, not for their shop. He is taking the interior decoration or What is that? Architect services for his own residence. That means for personal purpose he is taking the service. He is importing the services. So it will be treated as supply. Still it will be treated as supply. Where it is given like that, 7.1 clause B. 7 subsection 1 clause B is telling that if it is a case of importation of services for consideration, so whether it is in the course or furtherance of business or not, it will be treated as supply. It is telling like that. So this is what is regarding importation of service. Got it? Okay, so Ramaya is a supply. See, the importation of services by Ramaya is a supply under 7.1b, though it is not in the course or furtherance of business. You got a clarity on this? 7.1b. So 7.1a is over. 7.1aa is over. 7.1a is over. 7.1b is over. So 7.1a is supply includes all forms of supply. Supply includes all forms of supply, such as sale, transfer, barter, etc. Made or agreed to be made for consideration in the course or furtherance of business. That means goods or services shall be there, a form of supply shall be there, consideration shall be there, business shall be there. Then it will be a supply. 7.1a. 7.1aa is any person other than individual is there. He is making any transaction with other person who is a constituent of such firm or who is a constituent of such association or society, whatever it may be. If there is a transaction between them, then it will be a supply. If it is for some consideration, it may be cash consideration or other. If for some consideration there is a transaction happening between them, between the firm and the partners, between the society and its members, between the club and its members, wherever from transaction is flowing from one person to another, it is not necessarily from the club to the member, it is not necessarily from the society to the member, it may be from the member to the society. A transaction is flowing for some consideration, then it will be treated as supply. This is 7.1aa. Now 7.1b. 7.1b is telling that importation of services for consideration. Importation of services consideration. It may be for the purpose of business, it may be not for the purpose of business. Even though business is absent, even though for personal purpose, still it will be regarded as supply. This is what is 7.1b. So 3 clauses are over. Correct? 7.1a, 7.1aa, 7.1b. Clarity vachinda? Right. Now comes 7.1c. Now comes 7.1c, where we talk about schedule 1. Where we talk about schedule 1. 7.1c, correct? 7.1c and schedule 1. So 7.1c is telling that even though there is no consideration, if consideration is missing, then also it will be a supply. If consideration is missing, then also it will be a supply. So what are the such activities? So there are list of such activities. There are list of such activities which are given under schedule 1. So if these activities are being made even for no consideration, then also it will be treated as supply. Okay, so what are those activities? So which are mentioned in schedule 1. We will see each and every activity, right? So activities without consideration, deemed supply. Deemed supply means even though there is a condition missing from 7.1a, consideration is missing from 7.1a, but still it will be treated as supply. It shall be treated as supply. That is given under section 7 subsection 1 clause C. It shall be read with schedule 1. This is what is deemed supply. This is what is deemed supply. Even though consideration is missing, still it is a deemed supply. Still it is a supply. So likewise we have 4 paras here. Schedule 1, para 2, para 3, para 4. 4 clauses are there. 4 paras are there. Okay now. So with respect to this 4 transaction, there is a supply even though there is no consideration. See here how many are there? 4 are there. Okay, 1, 2, 3, 4. 4 paras are there. We'll start with first one. See, you know this concept of input tax creditor? You know this concept of input tax creditor, right? So what is happening here? A supplier is there. That means a businessman is there. He made some purchases. He sold some goods. Okay, right. Let's say goods worth 1 lakh purchased. Okay, GST at the rate of 18%, 18,000 rupees. 1 lakh 18,000 rupees is the bill. Correct? This is what is purchase bill. Okay, now he sold for 1,50,000 rupees, not necessarily the same goods. Yesterday, while taking up this supply chain, we had some assumptions there. Actually, a particular good costing 1 lakh rupee from manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, retailer to consumer. The same good is flowing from one person to another. We have taken like that, correct? At every stage we are adding up the value addition, which is a profit or cost to them. We are adding up the value addition and we have made the calculation. Actually, what will happen in GST? Every month sales has to be considered, every month purchase has to be considered. Whatever you have sold on that GST collection will be there. Whatever you have purchased on that GST paid will be there. In a month you have to see, you no need to correlate 1 to 1. You no need to correlate the goods 1 to 1. If a particular item is being brought, okay, so you no need to check whether the same item has been sold or not. You no need to check. You just have to make a calculation with respect to a particular month. In this month, what is the sale? On that, what is the GST? In this month, what is the purchase? On that, what is the GST? Difference between them has to be paid. So month wise you have to take. So you have to make a calculation with respect to this month. In the next month you have to make the payment. Okay, see, let's say month of May is there. In May month, May month is there. In the May month, sales are there, output GST is there. Sales 10 lakhs, output GST 1,80,000. In the May month, purchase are there. 15 lakh purchase has been made. On this GST, input GST, how much it will be? 1,80,000 plus 90,000, 2,70,000 input GST. That means output minus input 2,70,000. 90,000 excess we have paid while making the purchase. That will be carried forward to the next month. Or maybe vice versa. If you have purchased for 5 lakhs only, 90,000 you have paid. 1,80,000 minus 90. 90,000 will be paid now. Okay, so this is every month's calculation. It is not necessary to see that a particular good is purchased, whether it has been sold or not. We don't need to see like that. So you just have to make a calculation with respect to a particular month, with respect to a particular tax period. Tax period you have to see. So this calculation will be made in the month of June. With respect to May month, in the month of June you have to make a calculation. By 20th June you need to make the payment. By 20th June, if at all it is payable, you have to make the payment by 20th June. So no need to correlate between a good and a good. Same good need not be correlated. So same particular good has been purchased. So you need not see that whether it has been sold or not. You just have to see the transactions in a month, transactions in a tax period you have to see. So after making all this calculation, you have to make the payment in the next month. The following month you have to make the payment. This is how the system is, right? Okay. So with respect to the supplier, he has a purchase of 1 lakh. On this 18,000 rupees is the amount of GST he has paid. Now he has made the sales of 1,50,000. 1,50,000 rupees. Right. So on this GST will be 27,000. 27,000 GST will be there. So 1,77,000 rupees will be the invoice value. This is the value. This is GST. This is invoice value. 1,77,000. So output GST 27,000 minus input GST 18,000 rupees. So 9,000 rupees you have to pay in cash. 9,000 rupees he has to pay in cash. Correct? Right. Okay. So a particular good is purchased for 18,000 rupees. That means 1,18,000 rupees. In that GST amount is 18,000 rupees. That is again given as credit. That means ultimately he is getting that product for 1 lakh or not. Is it correct or not? See, this 18,000 rupees he is paying from his pocket. 18,000 rupees he is paying from his pocket. He is collecting 27,000 rupees. Out of such 27,000 rupees, he is adjusting 18,000 rupees and the remaining 9,000 only he is paying, correct? That means GST amount he is not paying from his pocket. Okay, so a product for 1,18,000 rupees is there, which is inclusive of GST, but he is getting the product for 1 lakh rupees only. That means GST is not paying. That means GST is not paying. Correct? If at all you want to purchase the product, if at all you want to purchase the product, you are not the dealer, you are not doing business, you want to purchase the product, for how much you have to pay? How much you have to pay? 1,18,000, including GST. Forget about the margin. Forget about the margin. For dealers, there will be a margin. You don't take into consideration. Okay. So for dealers, it is getting at 1 lakh rupee because exclusion of 18,000 rupees GST. For you and me, it is getting at 1,18,000 rupees, including GST. There is an 18,000 rupees difference. Why it is given like that? Why it is given like that? Why it is GST amount is excluded? So it is intended, it is purchased for a particular purpose. What is that purpose? He wanted to further sell it. He wanted to sell. He wanted to sell. That's why he is getting it at 1 lakh rupee. If at all you want to consume the product, it will be at 1,18,000 rupees. Okay, that means there is a product on which he has taken input tax credit. That means he is evading GST on it. You are getting it? Right. So such a product is there, which he has purchased at 1 lakh rupee excluding GST. Okay, that product he is transferring. That product he is transferring without consideration. Without consideration. Let's say I'm running a AC store. I'm a AC dealer. Okay. So for my house, so what I have purchased in my during the course of my business, 4 ACs are purchased during my course of business. Out of 4 ACs, 2 ACs has been sent to our home. Sent to our home for our personal purpose. Sir, what had happened? So 25,000 rupees is the cost of AC. 4 ACs we have purchased at 1 lakh. Okay, in that 2 ACs has been sent at rupees 50,000 rupees. There is no consideration here. 50,000 also not taken from them. Okay, so 2 ACs has been sent. So if at all the 2 ACs has been purchased personally to our home, means it would be costing around 59,000 rupees. But what is happening here? We have purchased it at 50,000 excluding GST. We have taken the credit of GST, that's why it is 50,000. And you are sending that goods to home and using it for personal purpose. So that means GST amount you are evading. Ultimately, personal purpose, you are using it for personal purpose. GST amount you are evading, you are not paying GST. Why you are not paying GST? Why there is a privilege? Why there is a privilege for taking input tax credit? It is for the purpose of business. That's why there is a privilege of input tax credit. But here what you are doing? You are transferring it to some other purpose other than business. So that's why whenever you are transferring the goods permanently, even though without consideration, on which input tax credit has been taken. If at all you want to transfer it for free, there are some goods on which you have not taken input tax credit. Not taken input tax credit means you have purchased with GST. That GST has not taken as credit. That GST is not taken. That means you have purchased the AC for 59,000 only. That AC, if you are transferring, no problem. It is not a supply. Whenever you are transferring an AC on which input tax credit has been taken, then it will comes under the definition of supply, even though it is made at without consideration. Even though it is made without consideration. You got this point? Input tax credit has been utilized. That means you are purchasing the product without GST. And now you are transferring that product without consideration. That means input tax credit benefit has been passed on freely. Okay, so in that cases, so it will be again treated as supply. So supply without consideration, deemed supply under Schedule 1, Section 7, Subsection 1, Clause C, Schedule 1. Okay, the first activity is permanent transfer or disposal of business assets where the input tax credit has been availed on such assets. You understand this point? Where the input tax credit has been availed on this assets. So whenever you are taking input tax credit on the business assets, it may be capital goods or it may be stock in trade, whatever it may be. If you are taking input tax credit means what is happening? You are not paying GST. Why GST has been given as exemption to you? Why input tax credit has been taken to you? You are doing business. You are a businessman. You wanted to further sell it or use it for the purpose of business. And you are not doing that. What you are doing, you are transferring such asset on which input tax credit has been taken to freely to some person. Okay. In such cases, you have to see in what will happen in that cases, it will be treated as again a supply. So if it is a supply means again what you have to do? If it is treated as supply means what you have to do? Let's say that AC of rupees 15,000 50,000 rupees has been transferred. It is now treated as supply. Supply means GST will be attracted. GST will be attracted again 18% GST, 9,000 rupees. You have to pay it now. This is an output GST. Output GST. This will be added to your output GST. If it is added to output GST, again you have to pay this 9,000 rupees, which you have already taken as credit. Now you have to repay it. Now you have to repay it. Got it? Right. So permanent transfer or disposal of business asset where the input tax credit has been availed on such asset. Permanent transfer without consideration on which input tax credit has been taken. If input tax credit has not been taken means that it is not a supply. If at all you have a product on which you have paid GST and you have not taken input tax credit, if such product has been transferred for free of cost, then it is not a supply. You don't need to pay any GST. If input tax credit has been availed, why the input tax credit has been given? Because it will be used for the purpose of business. That means it may be used during the course of business or it may be sold during the course of business. You are not using for both the purposes. You are just transferring for free of cost on which input tax credit has been taken. In such cases, this will be treated as a supply. If it is treated as supply means again you have to pay such GST amount. You got this point? Correct. Right. See, you might be heard this like somebody is asking for GST numbers while purchasing something. You have heard this, sir? Somebody is asking for GST number while purchasing something. Why it is like that? See, if I am purchasing a mobile phone, if I am not purchasing on my own name, if I am purchasing it on a name of a GST registered person, I can get GST benefit. The amount of GST will be there, no? That can be taken as input tax credit by the dealer. That means his output tax liability is getting decreased by taking input tax credit. That means GST amount is getting decreased, no? So if at all I am purchasing it on my own name, I could not get anything. I have to pay including GST. If at all we are purchasing on the name of the business, they will get input tax credit. Thereby the GST liability will be reduced. That benefit will be passed on to me. But that is correct? That is actually correct? The property or business asset will be on the name of the dealer, but it will be actually used by me. That means that will be a permanent transfer or disposal of business asset on which input tax credit has been taken. That will comes under this clause only, no? So again they have to pay GST. How they have to pay GST? Whatever the mobile phone which I am using there, no, that will be treated as again as a supply to them. They have to show it as a sale. Got it? Right. This is one thing. Right. So next clause, next para we are moving. First point done, na? Right. Second point. Supply of goods or services are both between related person or between distinct person as specified in section 25 when made in the course or furtherance of business. Okay. See, supply of goods or services are both between related persons. So we need to check who is a related person. So if it is a supply between related persons, even though without consideration, then it will be treated as supply. So we need to check who is a related person. Next, or between distinct persons. Now we need to check who is a distinct person. As specified in section 25, when made in the course or furtherance of business. When made in the course or furtherance of business. So we'll check here, we will have a definition of related person and distinct person here. See, we have an example with respect to this para 1. Permanent transfer or disposal of business assets. Para 1 of schedule 1. Dhruv gives old laptops being used in the business to his friend free of cost. See, Dhruv is a businessman. Okay, during the course of business, he bought some laptops. That means on such laptops, he has taken input tax credit. That laptops are being transferred to his friend. This will qualify as a supply. This will qualify as a supply. What will be treated as supply? Transfer of laptop to his friend will be treated as supply. So on such laptops, he has to pay GST. Okay, provided input tax credit has been availed by Dhruv on such laptops. While purchasing that laptop, if he has taken input tax credit, then now it will be treated as supply. You got this? Next point, a dealer of air conditioners permanently transfers the motor vehicle free of cost. Okay, ITC on the said motor vehicle is blocked. ITC on the motor vehicle is blocked. ITC on the motor vehicle means, see, motor vehicles are there now, like it may be two-wheeler or maybe four-wheeler. On motor vehicles, input tax credit cannot be taken. That is a blocked credit. So you will see when we discuss input tax credit chapter under section 17 subsection 5, we will discuss that. On motor vehicles, input tax credit is blocked. You cannot take input tax credit on the motor vehicles. So input tax credit has not been taken on the motor vehicle. Such motor vehicle has been transferred. There is a problem, huh? Input tax credit has not been taken. Now it is being transferred. No problem, no. Not a supply. No, not a supply. So the motor vehicle is free of cost. ITC on such motor vehicle is blocked. That means input tax credit has not been taken. That's why it will not be treated as supply, even though if it is moved free of cost. Okay, so the transaction will not constitute a supply as the condition of availment of ITC on the business asset transferred is not fulfilled. What is the condition? Input tax credit has been availed on the business asset. If it is availed on the business asset, now it is being transferred. Okay, in such cases only it will be treated as supply. Now the input tax credit has not been availed. That's why even though it is transferred without consideration, it will not be treated as supply. You got this? Right. So now moving on to the second point, supply between related person. Supply between distinct person without consideration. It will be treated as supply. So now we need to know who is a related person. We need to know who is a related person. We need to know who is a distinct person. We need to know who is a related person, who is a distinct person. See, so related person definition. So if it is a members of a same family, other points are also there. Under the definition, other points are also there. The important point is employee-employee relationship, employee-employer is there. Those two parties are regarded as related persons under GST. Okay, one thing. And members of the same family. So what is the definition of the family? That also we need to see. Right. So a person who is under the influence of another person is called a related person. Like members of the same family. One is influencing the other, or one is influenced by other. Okay, then those two will be regarded as related persons. That means subsidiary holding relationship is there. So there is a chance for influence. So okay, so subsidiary of a group company, etc. Under GST law, various categories of related persons have been specified. The term related person has been defined in explanation to section 15. The said definition has been depicted by the way of diagram as follows. See, here we have the diagram with respect to related person. See here, persons including legal persons are deemed as related if see, out of this we have two important points. One is with respect to members of same family, and another one is employer-employee. There is a chance for a question being asked on this area. Okay, now, okay, employer-employee relationship. So employer and employee are related persons. If they are the members of the same family, they can be regarded as related persons. Other points are also there under the definition, but these 2 points are important. Okay, right. See, such persons are officers or directors of one another business. Okay, 2 businesses are there. So in one business, one director is there. No, he is the director of other business also. He is like mutually. Okay, next. Persons are legally recognized partners. That means partners of a same partnership firm. Okay, then these 2 partners will be Related persons, obviously. Employer and employee. Next, a third person controls, owns or holds more than 25% of the voting stock or shares of both of them. That means A private limited is there or limited is there, B private limited is there or limited is there. X is a person who is having 30% stake in this company. X is a person who is having 50% stake in this company. Now these A private limited and B private limited are related persons. One person X is there, he is having more than 25% in A limited. He is having more than 25% in B limited. Now A limited and B limited are related. A limited and B limited are related. Okay, next. A third person controls or owns directly or indirectly more than 25% voting stake. Next, one of them controls directly or indirectly the other. One is in control of other or one is controlling the other. Then both of these are related persons. Next, a third person is controlling both of them. That means X is controlling A, X is controlling B. So both of them are under one's control. Then A and B will be related persons. Next, a third person controls both of them. Such persons together control a third person. That means A and B controlling X. A and B controlling X. Both of them are exercising control on a single person. In such cases, A and B will be partners. A and B will be related persons. And such persons are the members of the same family. Members of the same family. It may be wife and husband. Spouse it may be. Children, brothers, sisters, parents. Likewise, members of the same family. Next, one of them is a sole agent, sole distributor, sole concessionaire of the other. That means principal agent relationship. Okay. So if this is the case, then it comes under the definition of related person. It comes under the definition of related person. So whenever you go for the family definition, it will comes under some other place. So family means, so only with respect to wife and husband, related persons. With respect to parents and brothers, sisters are there, no? With respect to parents, brothers and sisters are there, no? Only when they are financially dependent on them. Only when they are financially dependent on them. So family means wife, husband, children. So whenever we are talking about brother, sister, parents, then only when they are financially dependent on them, then only they will be regarded as related persons. You got this, sir? Right. We have an example here. So Miss Priya holds 30% shares of ABC Limited and 35% shares of XYZ Limited. Now ABC and XYZ are related. Okay. Q Limited has a deciding role in corporate policy, operations, management, and controlling and quality control of R Limited. Now Q Limited and R Limited are related. You got this? You got this? Okay. So whatever the transaction is happening between two persons who are related, even though if it is happening without consideration, then it is a supply. Okay. Let's say husband is having a business. So some goods are there in such business has been transferred to wife without consideration. Now it will be treated as supply. Even though it doesn't matter whether they have taken ITC or not. So with respect to first point only, permanent transfer or disposal of business assets only we have to see. If it is a case of related person, it is not matter. Okay, even though ITC has not taken also, it is a transaction between related persons and that too for no consideration, then it will comes under schedule 1 para 2, it will comes under the definition of supply. You got this point? Related persons. Now comes the discussion with respect to distinct persons. Distinct persons. See, in GST, you know this PAN, no? Permanent account number. For a person, it may be any person, permanent account number is compulsory. PAN is compulsory. For any person, PAN is compulsory. Correct? Right? Under income tax, PAN is compulsory. Permanent account number. So on that PAN only you can take GST registration. So if at all you want to take GST registration, you should be first having PAN. Without PAN, you cannot take GST registration. Because if you observe the GST number, If you observe the GST number, it would be starting with, in Hyderabad, it would be starting with 36. And so some alphanumeric number will be there. Lastly, you will find 1ZC, 1ZL, likewise, some character will be there. So in between, this 10 digits will be there, no? This 10 digits will be PAN. This 10 digits will be PAN. That means if you don't have PAN, you cannot take GST registration. If you have PAN, then only you are eligible to apply for GST registration. So if you are incorporating a partnership firm, the first thing you have to do, you have to enter into a partnership agreement, you get it registered, and you have to apply for a PAN. You have to apply for a PAN. After getting the PAN from the income tax department, then only you are eligible to apply for GST registration. Without PAN, you cannot apply for GST registration. Got it? Right. See, for a person all over India, there will be one PAN. You cannot have multiple PANs. All over India, wherever you go, all over India, you will be having one permanent account number. Let's say a company is there having operations in every state, all over India. In every state they are having operations, they are having 100 branches. A company is there having 100 branches, but they will be having only one PAN. They will be having only one PAN. They cannot have more than one PAN. So even as a bank is there, let's say SBI is there, that may be SBI is having 10,000 branches all over India, but SBI will be having only one PAN. Okay, so how many branches are there in the entire country? It doesn't matter. It shall be having only one PAN. One entity shall be having one PAN. Right. Now, see, distinct but related person means the wife and husband are related, we are telling. Okay, na? Q limited and P limited are related, we are telling, because of some connection. Got it? Here, see, Q limited will be having different PAN. Correct? P limited will be having different PAN. But we are telling that these two are related. Okay, wife and husband are there. Wife will be having a separate PAN. Husband will be having a separate PAN. Okay, but these two are related persons as per the definition. We are telling that. Now, whenever we are talking about distinct person means person having same PAN. Distinct person means PAN will be one only. Distinct person means PAN will be one only. Then what is a distinct person? What is a distinct person? We are talking about the branches, no? For each separate branch, we can take a separate registration. For each separate branch, we can take a separate registration. Let's say SBI is there. SBI is there. In Hyderabad, SBI is having a branch. Hyderabad branch. Okay. In Chennai, SBI is having a branch. In Chennai, SBI is having a branch. So if at all SBI want to take registration, and in Hyderabad SBI is have, let's say 10 branches are there. In Chennai 10 branches are there. Okay, if at all Hyderabad wants to take separate GST registrations for each branch, they can take. Each branch separate registration they can take. Each branch separate registration. But whenever they are changing a state, they have to take a separate registration. There shall be a separate registration. That means for each state, one registration is compulsory. Why like that? Why they need separate registration for each state? Why there is a separate registration for each state? See, we are talking intra-state transaction, interstate transaction, dual GST model, CGST, SGST. Okay, if at all the 1 lakh rupees GST is there, means 50,000 CGST, 50,000 SGST. Correct? So GST has to flow to the state government also. That means a separate registration has to be taken in the such state. So wherever you are having operation in a separate state, a separate registration must be there in a separate state. So in two different states you are having operations, you shall be having two different registrations. Okay, if at all you want to take multiple registrations in one state, you can take. That is voluntary at your option. But if you are having operations in more than one state, for each such state, you need to have separate registration for each state. Now, whenever you are having a different registration, same PAN, Same PAN, SBI only. But SBI Hyderabad, SBI Chennai. So SBI Hyderabad, that means SBI Telangana will be having a separate registration. SBI Tamil Nadu will be having a separate registration. Got it? Okay. So in SBI in SBI in Telangana having multiple branches, multiple main branches. In Khammam one main branch is there. In Hyderabad one main branch is there. They want to take separate registrations for two different branches. They can take separate registration for two different branches. You got this point? Okay. So separate registrations are taken, right? See, we have a factory. We have a factory in Bangalore. We have a retail outlet in Hyderabad. We have a factory in Bangalore. We have a retail outlet in Hyderabad. We shall be having two different registrations. This is under same company. X Limited is there. So for this is Bangalore premises is the factory. Hyderabad is the outlet, retail outlet. From factory to retail outlet stock will be moved. Stock will be moved. Here the finished good will be produced. That stock will be sent to Hyderabad outlet, and then from Hyderabad the sale will be made. Sale will be booked. Okay. So in this case, two separate registrations are required. X Limited will be having one PAN. With the same PAN, X Limited has to register in Karnataka. X Limited has to register in Karnataka. X Limited has to register in Telangana. State-wise registration. Okay, if you have retail outlets, more retail outlets in Hyderabad, retail outlet 2 is there. You want to take separate registration for retail outlet 2, that can be possible. You can take separate registration for retail outlet 2 in Hyderabad. So what will happen if you take a separate registration? It will be regarded as a distinct person under GST. Okay, so two separate registrations means you are a distinct person. You are a different person under GST. Under income tax you are one. Factory, retail outlet 1, retail outlet 2. Under income tax you have only one PAN. Combinedly you have to assess under income tax. But for GST, how many registrations are there? That many assessments has to happen. Okay, right. So factory Bangalore, retail outlet Hyderabad, you have to take separate registration for each state. In a state, if you have multiple branches, you can take multiple registrations, but it is optional only, it is not mandatory. You got this point? Right. So whenever a stock is being transferred from factory to retail outlet in Hyderabad, this stock transfer will amounts to supply. GST will be attracted. That is our factory only, our manufacturing unit only. This is our retail unit only. This is of one person only. X Limited, this is of one person only. But still, just a stock transfer, there is no consideration also. Just a stock transfer. Stock is in this hand. We are moving into this hand for ease of doing business. Okay, but still this transaction will be taken as a supply, even though without consideration, because it is made between distinct persons. So by this there will be an increase of GST burden. Increase of GST burden. At factory we will collect GST. Antena? At factory we will collect GST because sale will be booked at factory. From retail outlet we will collect GST. At retail outlet we will take input tax credit. Correct? Factory, for factory it is a sale. For retail outlet it is a purchase. So GST will be collected at factory, which will be paid by the retail outlet. At retail outlet we will take it as input tax credit. There is no extra GST burden, but there is a compliance burden, that's all. There is no extra GST burden. Okay, na? There is a compliance burden, that's all. But see, if retail outlet 1 is there, retail outlet 2 is there within the same state, but you are taking two different registration, then also whenever the stock is moving from retail outlet 1 to 2, then it will be supplied. Then GST will be attracted. Same thing here also. If you are taking two registrations, if you are not taking registration, then fine. You can freely move the stock from 1 to 2 or 2 to 1. But if you are taking registration, then a simple movement of the stock will attract GST. It will comes under supply and it will attract GST. You got this concept of distinct person, huh? Right. See here, distinct person specified under section 25. Distinct person specified under section 25. Okay. So before we go through the statutory provisions of distinct person, let us first have an overview of the registration provisions for better understanding. So registration provisions, we have a separate chapter also with respect to registration. So under GST law, supplier is required to obtain state-wise registration, and that too PAN based registration. Without PAN, you cannot move for registration. Okay, now first there shall be a PAN, and that too all over India there is only one PAN to a particular entity or a particular person. For individual one PAN, for HF one PAN, for firm one PAN, for company one PAN. Likewise, for the entire entity, it may be having any branches, it may be having any outlets, it may be having any factories, whatever it may be. For the entire entity, there will be one PAN only. Group companies are different. Reliance Power Limited is there. Reliance Communications is there. These are two different entities under Reliance Group. So Reliance Communication, one PAN will be there. Reliance Power, one PAN will be there. So for a separate company, separate PAN will be there. For Reliance Power, there will be separate branches. For Reliance Telecommunication, there will be separate branches. For all these branches, Reliance Telecommunications PAN will be applicable. You got this? Right. So whenever there is only one PAN, but GST registration shall be state-wise registration. PAN-based registration, state-wise registration. For each and every state, there shall be a registration. Within the state, if you have multiple branches, you can take separate registration if at all you are feeling to take. Okay. So it is not compulsory, it is not mandatory. You got this? Right. This is optional only. Right. Under GST law, a supplier is required to obtain state-wise registration. He has to obtain registration in every state or union territory from where he makes a taxable supply. This you need to understand. From where you are taking taxable supply, from there only you have to take registration. If at all you are not taking taxable, you are not making taxable supply. You are not booking sales from there. You are not booking sales from there. You are not doing any supply from there. For the sake of information, you kept an office there. It is not a sale point. The retail outlet only you are selling. At the factory premises only you are selling. You are just maintaining the office for the sake of name. That's all. People wants to know the name of our company, know the name of our trademark. That's why only he kept the office there. You are not making any sale activity in such a state. In such cases, you no need to take registration. See, in Bangalore, KS Academy is there. From KS Academy in Bangalore, there is no teaching activity. Just for the sake of the brand only, they kept an office. Okay. Likewise, if you are taking, in such cases, you no need to take the registration. Okay. So under GST law, a supplier is required to obtain state-wise registration. He has to obtain registration in every state or union territory from where he makes a taxable supply, provided his aggregate turnover exceeds a aggregate turnover. This is subjected to, registration is subjected to turnover limits. We have seen, right, in the first chapter only. Threshold limits 10, 10, 20, 20, 20, 40 we have seen. 10, 10 for which states? Mizoram, Manipur, Tripura, Nagaland. For these 4 states, 10, 10. Goods turnover 10, services turnover 10. Next. 2020. For which states? No. Pondicherry, Sikkim, Telangana, 2020. Some states are there. Okay. Next, remaining states, it is 2040. For services 20, goods 40 lakhs. That means for Andhra Pradesh, Tamil Nadu, Kerala, Karnataka, all these states, 2040 only, right? 2040 only, right? So whenever you are taking registration, you wanted to take registration, that is subject to threshold limit. Whenever the turnover is getting crossed, then only you take the registration. Or last year, if your turnover is crossing this limit, then you have to take such registration. Okay, subject to such limits. If at all you want to take voluntary registration, you can take. Once you have taken registration in one state and you are having operations in other state, you are taking voluntary registration in one state. You are having operation in other state, then you have to take registration for such state also. Okay, from where you are taking, you are making taxable supply, right? So threshold limit. Thus, he is not required to obtain registration from a state or unitary from where he makes a non-taxable supply, right? Since the registration in GST is a PAN-based registration. Once a supplier is liable to register, he has to obtain registration in each state or union territories in which he operates and makes taxable supply under the same PAN. Further, he is normally required to obtain single registration in a state or union territory. Single registration in a state or union territory. That means for every state there is a separate registration. Okay. That however he has multiple places of business in a state, he can take single registration for the said state or union territory. He may also take separate registration for any place of business in the state or union territory. You got this point? So if you are having multiple places of business, you can take multiple registrations in the same state. Now let us understand the concept of distinct persons. So the establishment of a person with separate registration, whether within the state or in a different state, are considered as distinct person. See, in Bangalore factory is there, in Hyderabad retail unit is there, you are taking separate registrations. So factory and the outlet, retail outlet, are two distinct persons. Retail outlet 1 you have a registration, outlet 2 you have a registration, retail outlet 1 and 2 are distinct persons. This is what is the concept of distinct persons. So where a person having one establishment in a state has another establishment in different state, not necessarily registered, these establishments are considered as establishments of distinct persons. That means in this state you have a registration, you have an outlet, you have a registration. In the next state you have a office there. You don't do taxable supply. That's why you are not taking registration. You need not take registration. If you are making taxable supply, then only you need to get it registered. But still, those two are establishments of a distinct person. Got it? Even though it is not registered in another state, these two will be considered as distinct persons. Got it? Even though it is not registered in another state. Why it is not registered? There is no taxable supply from such place. That's why it is not registered. So that's why between these two, that will be considered as distinct persons. Now the statutory provisions relating to distinct persons are contained in subsection 4 and 5 of section 25. They have been explained with the help of examples as follows. A person who has obtained or is required to obtain more than one registration, whether in one state or union territory or more than one state or union territory, shall in respect of each such registration be treated as distinct person. You understand this? Okay. Example you see. Mohan, a chartered accountant, has a registered head office in Delhi. He has obtained registration in state of West Bengal. Okay. In respect of his newly opened branch office, Mohan's registrations under GST under the same PAN in West Bengal and Delhi shall be treated as distinct persons. Okay, a firm, a CA firm is there, having branches all over India. Okay, many branches are there. Okay, in Chennai there is a branch, in Delhi there is a branch, in Mumbai there is a branch. For each and every branch, there shall be a separate registration. Each such branch will be treated as a distinct person. Each such branch will be treated as a distinct person. Simple, right? Okay, this is what the concept of distinct person. Okay, you can have the look of these examples. 1920. You just have it. Go through these examples. Next 3 pages you can study. See, stock transfers qualify as supply here because distinct persons. Stock transfer, just stock transfer between distinct persons. So stock transfer, it is treated as deemed supply. So registered Delhi showroom, registered Lucknow factory. Okay, so these two have separate registrations. Must be having separate registration. Okay, and hence these are distinct persons. There is a stock transfer between the two, and hence it is a supply, deemed supply. As per schedule 1, schedule 1 para 2. Schedule 1 para 2. No consideration, but still it is a supply. Have you seen the other examples? See here, Lucknow, Kanpur. Okay, stock transfer is not a supply since there is a single registration in UP. Okay, so if they have taken two separate registrations, then stock transfer between them amounts to supply. Even though there is no consideration, that amounts to supply. Single registration in UP. Okay, so if they have taken two registrations, then GST will be attracted. Supply will be there, GST will be attracted, even though there is no consideration as well. Right here, where the establishments have same PAN. Okay. Next, where the separate registrations have been obtained for two places of business within the same state. If it is not taken, then whether the transfer between them will amounts to supply ante, it is not a supply. So if establishment has same PAN, two separate registrations are taken in the same state, okay, stock transfers will be treated as supply between them. You understand this? Right. Okay. So employer-employee relationship between employer and employee is also a related person, right? Related person, right? Okay. So in the terms of definition of related person given above, employer and employee are related persons. Okay. However, services provided by an employee to an employer in the course or in the relation to his employment are outside the scope of GST. Correct kada? Okay. See, as an employee, he is providing services to the employer. As an employee, he is providing services to the employer. Okay, so that's why he is getting salary. He is giving a service to the employer. So this is outside the scope of GST. That means this is not a supply. GST will not be attracted. Outside the scope of the employment, that means it is not in the scope of his employment. That means it is not his obligation. But still he is doing some other service. Likewise, he is doing his job. At the same time, he is procuring some goods to the employer. Procuring some goods to the employer. As an agent, he is doing business. Then in such cases, it is a supply. From whom to whom? It is a supply from the employee as an agent to the employer. Then it amounts to supply. Later point of time, GST will come or not, we will see later. Whether it is he is a taxable person or not, whether he will be it will be a tax exempted supply or a taxable supply or not, then GST will come or not, we will see later. But now it is a supply or not means it will amounts to supply because it is not in the scope of employment. Okay, right. Next, gift by employer to employee. During a financial year, if the value of the gift by the employer to the employee, if the value of the gift by the employer to the employee is more than 50,000 in a financial year, by an employer to employee shall not be treated as supply of goods or services. If it is up to 50,000, it will not be treated as supply. If it is more than 50,000 without consideration, then it will be treated as supply and subjected to GST when made in the course or furtherance of business. You got this point? Right. Next, perquisites. You know this perquisites now? You know this perquisites. Okay. So since services by an employee to employer in the course or in relation to employment are outside the scope of GST, supply by employer to employee in terms of contractual agreement entered into between the employer and employee will not be treated as GST. That means within the course of employment, if anything is given by the employer to the employee, will not be treated as supply and there will not be any GST. Next, it follows there from that perquisites provided by employer to employee in terms of contractual agreement entered into between the employer and the employee will not be subject to GST. That means he has provided a car facility, he has provided a house rent, that means accommodation he has provided, that will comes under the perquisite. Okay, so if the perquisite is as per the agreement of the employment, then it will not be a supply and there will not be any GST. Okay, so this is about para 2 of schedule 1. Para 2 of schedule 1. Okay, so schedule 1, first para is schedule 1, first para. Do you want to supply first para? What is the first para? What is the first para? Schedule 1. Permanent transfer or disposal of business assets on which input tax credit has been availed. Even though without consideration, that will be treated as supply. First point. Second point, supply of goods or services are both between the related person or between the distinct person as specified in section 25 when made in the course or furtherance of business will be treated as supply, even though made without consideration. These are the two paras which we have discussed. So even though without consideration, in these cases there will be a supply. So we have seen the definition of related person, we have seen the definition of distinct person as well. So between the related person, between the distinct person, transaction is happening, activity is taking place, but there is no consideration flowing from one to another. In such cases also, the activity will be treated as supply. Now moving on to the third point, third para of schedule 1. Third para, what is that? Supply of goods by principal to his agent. By principal to his agent. Next point, by agent to his principal. By principal to his agent, or by an agent to his principal, where the agent undertake to supply such goods on behalf of the principal. Where the agent undertakes to supply such goods on behalf of the supply, where the on behalf of the principal, where the agent undertakes to receive such goods on behalf of the principal. That means it is talking about the sale. It is talking about the purchase. So purchase on behalf of the principal, sale on behalf of the principal. Whatever it may be, if the agent is doing, see, principal is there, agent is there. In order to sell the goods, goods or the stock shall be moved from principal place to agent place. Correct or not? Correct or not? Right. So now this transfer of the stock from the principal to the agent, this transfer of the stock from the principal to the agent will be treated as supply or not? Will be treated as supply or not is the question here. Okay. So there will not be any consideration. If the agent is selling the goods, then he will get commission. That's all. He is not purchasing goods from the principal. That is what the concept, no. So just the goods will be transferred from the principal place to agent's place. That's all. Okay. There will not be any consideration between the principal and the agent other than agency commission. Other than agency commission. Right. See, in this case, the transfer of the stock from the principal to the agent place. In the same case, there is another point here. So what is that? So agent is receiving the goods, purchase, receiving the goods. Now the agent has to shift the stock from agent place to principal place. This is another transaction. So this stock transfer amounts to supply or not? This is the question here. These are the 2 points we need to have a discussion. Okay. So first, from principal to agent, the stock is moving. Whether this will be treated as supply or not. Okay. Why it is moving to agent's place? For further sale. Here, agent is purchasing the goods on behalf of the principal. From agent place to principal place, the stock is getting moved. This transfer will be treated as supply or not? This is the question here. So in such case, if the agent is having power to issue the invoice, on the name of the agent, on his own name. If the agent is having the power to issue the invoice on the name of the agent, on his own name, then the supply between the principal to the agent will be treated as a supply. Then the transfer of the stock from the principal to agent will be treated as supply. Same is the case here also. Whenever the agent is having the right to receive the invoice on his own name, then the supply between the agent to the principal will be treated as supply. Transfer of the stock from the agent to the principal will be treated as supply. You got this, sir? Okay. So likewise here, supply of goods by a principal to his agent, where the agent undertakes to supply such goods on behalf of the principal. Undertakes to supply means he undertakes to further sale. Okay. Next, where the agent undertakes to receive such goods means he undertakes to purchase. That means while purchasing, he has to receive the goods and to transfer such goods to the principal place. So then it will amount to supply only when the agent is having the power to receive or issue the invoice on his own name. Then only it will be treated as supply. Right? So okay. So even though there is no consideration for such transfer between the principal and the agent, but still that will be treated as a supply and liable to GST. Got this point? Right. So there is an extension of this concept with respect to principal and agent. So which is clarification on delegatory agent. See, you just have this, go through the example, this thing. Next, we will have a discussion on delegatory agent. Who is delegatory agent? Who is delegatory agent? Agent, delegatory agent. Is there any difference between agents and delegatory agents? Generally, delegatory agent is the person who guarantees the payment. Who guarantees the payment to the principal. That means he is selling the goods to the customer. He knows the customer very well. Rather than principal and the customer relationship, agent and the customer relationship will be a little bit stronger. So that's why he is guaranteeing the payment to the principal. Okay, right. See here, delegatory agent is there. Okay. Principal is there, agent is there, customer is there. He is the DCA, delegatory agent. Okay. So agent is not having the power to issue invoice. First case. Agent is not having the power to issue invoice. That means sale is happening between the principal and the customer directly. Correct? So he is selling the goods and he has to receive the consideration. Correct? But this consideration is there, no? That is being paid by the agent. Agent is paying the consideration. Okay, on behalf of the customer. On behalf of the customer. That means he is extending some facility to the customer. Correct? Credit facility to the customer. So for this facility, agent is receiving this consideration from the customer plus some interest he is receiving. Plus some interest he is receiving. Okay, got it? Right. So with respect to interest, we already have seen in the definition of money, in the definition of money, activities relating to the use of money. Activities relating to the use of money. Money is not a service, money is not a good, but activities relating to the use of money is a service. Activity relating to use of money is a service. This we have seen. That means, let's say if a bank is there giving loan to customer. Okay, customer is paying interest to bank. This is a service. Amount of loan is not a good, amount of loan is not a service. Giving a loan against the interest is a service. Giving loan against interest is a service. So we'll check with 7.1a. We will check with 7.1a. It is a business. There is a consideration. It is a service. All the conditions are there. It is a form of supply. It is a form of supply. All the conditions are there. 7.1a is satisfied. That means it is a supply. That means it is a supply. That means it is a supply. So whenever it is a case of supply, Then GST attracts or not is the question. GST attracts when it is made by a taxable person, when it is made by a taxable person and it is not an exempt supply. That means it is a taxable supply. Then GST will come. Then GST will come. Okay, so here with respect to interest, extending loans against the interest is an exempt supply. Is an exempt supply. That means GST will not be attracted here. You got this point? Okay, activities relating to the use of money. So see here, what is happening in this case? What is happening in this case? From principal to customer, there is a sale happening. Consideration has to be given by the customer to the principal, but instead of the customer, who has given? Agent has given the consideration. On this, interest is being paid by the customer to the agent. So is this activity relating to the use of money? Is this an activity relating to the use of money? Correct or not? Activity relating to the use of money. Correct. So for that he is charging some interest. For that he is charging some interest. Interest is the consideration. That means it is a supply. Supply from whom to whom? From agent to customer. Supply from agent to customer. For the consideration against interest as the consideration. Correct. But still this interest will not be attracted with the GST because it is an exemption. Activity relating to the use of money for which the separate consideration is charged is a service during the course or furtherance of business. For consideration, everything is there, 7(1)(a) supply, but still there is no GST because it is exempted. Because it is exempted supply, right? So in the second case, this is one case. In this case, what is happening? The invoice has been issued by the principal to the customer directly. Sale is from the principal to the customer directly. Correct? Right. In the second case, same delegatory agent only. Delegatory agent only. Principal is there. Customer is there. Okay. Agent sold the goods to the customer. Agent sold the goods to the customer. And the invoice has been raised by the agent only. Agent only. Invoice raised by the agent only. So the customer has to give the money to the agent only. Later on, agent will pass on the money to the principal. So he has transferred some stock. This is a supply now. He has to receive some consideration now. Okay, right. Here, delegatory agent is selling the goods to the customer. Customer has to give some consideration now. Okay, and one more service is also there. From DCA to principal, there is a service. Agency service. For agency service, agent has to receive commission. This is a separate service. How many are there total? In total, first stock transfer, this is a supply, one. First supply. Second, agency services is being provided by delegatory agent to the principal. Second. Third, delegatory agent is selling the goods to the customer. Third. Okay, and the fourth one is that, total 4 are there. Fourth one is that, this consideration is there now. He is not taking this consideration now. He is extending the facility. And for delayed consideration, he is charging some interest. This is the fourth service. Total 4 services are there. First one, stock transfer from principal to agent. Second one, commission, agency services from agent to principal. Third one, from agent to customer, there is a sale. Fourth one, from agent to customer, there is an extension of facility. Likewise, 4 services and 4 supplies are there here. So in this, whenever the consideration is delayed here, that means he is taking some extra time to pay. Okay, in such cases, there will be an interest. Charged by the agent along with the consideration. Then on the interest also GST will be attracted. In the last case, on interest GST is there. GST is not there. Why it is not there? Because the consideration has to be given by the customer to the principal directly, and the interest has to be given to some other person. That is the agent. The agent is extending the loan facility here, short-term loan facility here. Here in this case, there is a delay in consideration. There is a delay in payment of consideration. That's why for the delay in consideration to consider, to tolerate, along with the consideration he is charging some interest. So the entire amount will be attracted to GST here. So this is what the clarification with respect to delegatory agent. You got it? Huh? So we have a discussion, elaborate discussion with respect to delegatory agent, like clarification. 3 points are there. You have to study that points. You just go through the points. At a little critical discussion, you may get a confusion there, but this is the ultimate gist. Same point for agent also, for delegatory agent also same. Whenever the agent or the delegatory agent is having the power to issue the invoice on his own name, then only supply between principal to agent. If he is not having such power, that is not a supply. Okay, that is a common point here. Okay, only extra point is with respect to extension of the loan facility, charging of the interest. That interest will be attracted to GST or not is the question here. Okay, all right. There may be a question on this. See, in first case, whether DCA falls under the ambit of agent under para 3 of schedule 1 is the first question. See, in case where the invoice for the supply of goods is issued by the supplier to the customer, either himself or through DCA, DCA does not fall under the ambit. In case where the invoice for the supply of the goods is issued by DCA in his own name, DCA would fall under the ambit of agent. If he is falling under the agent under para 3 means principal to agent, it is a supply. Got it? Even though there is no consideration. Okay, first point that is. Second point, whether the temporary short-term transaction-based loan extended by DCA to the recipient buyer, for which interest is charged by the DCA, is to include in the value of the goods being supplied by the supplier. Principal, whether DCA is not an agent under, where the DCA is not an agent under para 3 of schedule 1. That means he is not issuing the invoice on his own name. DCA is not issuing first case. In such cases, interest has to be added. Interest comes under supply. Extension of loan facility kada. Interest is not that means interest is not attracted to GST. It cannot be added to consideration. Okay, see here. Supply of goods from the supplier, principal to recipient. First point. Supply of agency service from DCA to supplier or the recipient or both. Correct. Next, supply of extension of loan services by DCA to recipient. These 3 services are there in the first transaction. First case. It is clarified that in case where the DCA is not an agent under para 3 of schedule 1. How he is not an agent? That means he is not issuing the invoice. Who is issuing the invoice? Principal is issuing the invoice. The temporary short-term transaction-based loan being provided by DCA to the buyer is a supply of service by DCA to recipient on a principal-to-principal basis. Principal-to-principal basis means a customer is a principal, agent is a principal. P2P basis. Okay. And is an independent supply. Therefore, interest being charged by DCA would not form part of the value of the supply of goods to the buyer by the supplier, and it is an exempted. It is an exempted service. Okay, last case where DCA is an agent under para 3 of schedule 1. How he is an agent under para 3? He is having the right to issue the invoice on his own name. In such cases, he is a separate party, right? In such cases, how many services are there? Or how many supplies are there? 4 are there. What are the supply of goods by the supplier? That means principal to the agent. This is the first. Supply of goods by DCA to the recipient. This is second. Supply of agency services by DCA to the principal. This is third. Next, extension of loan. Extension of loan. Extension of credit by DCA to the recipient. These are the 4 services or 4 supplies here. Okay. In such cases, it is clarified that where DCA is an agent under para 3 of schedule 1, temporary short-term transaction-based credit facility being provided by DCA to the buyer no longer retains its character as an independent supply. Okay, it is an ancillary supply. It is a composite supply. Along with what? Along with the provision of goods, he is extending the facility. Okay, and is subsumed in the supply of goods by DCA to the recipient. And is emphasized that activity of extension of credit by DCA to the recipient would not be considered as a separate supply, and it is in the context of supply of the goods made by DCA to the recipient, and hence consideration plus interest will be the value. On this value, GST will be levied. On this value, GST will be levied. That means on interest amount, GST is being levied. Got the clarity? On this interest amount, GST being levied. A little trickier. Okay. The first point you have to understand is whether he is an agent under para 3 or not. When he will be an agent under para 3? Whenever he is having a right to issue the invoice on his own name, or right to receive the invoice on his own name, then he will be an agent under para 3. If he is not an agent under para 3, then principal to customer directly the sale will be there. There is a movement from principal to agent, then it will not be a supply. Okay, this is the first point. Later point of time, there is a discussion with respect to interest. Whether interest will be form part of the value or not. On interest also we will charge GST or not is the question. So when you will charge GST on interest? Whenever he is an agent as per para 3, then only interest will be added to the consideration on the total value, GST will be charged. Whenever he is not an agent as per para 3, then interest will not form part of the consideration or value. Okay, that means on interest there will not be any GST. This is what the gist is. You just have go through it. Entire para 3. Entire para 3 you just study. See, in para 3 we are talking only with respect to goods. We are not talking about services. Okay. Supply of goods from principal to agent. Supply of goods only. Not any supply, not services. Only supply of goods from principal to agent is being covered under para 3. So in schedule 3, 3 paras has been covered. First, permanent transfer or disposal of business assets on which input tax credit has been taken. First point. Second point, supply of goods or services between the related persons or distinct persons. Okay, between the related persons or distinct persons. Third para, supply of goods from principal to agent. From principal to agent. So if at all he wants to be an agent as per para 3, the agent should be having the right to issue or receive the invoice on his own name. Okay, so we left with only one para in schedule 3, deemed supply. Fourth para. Okay, what is that regarding? Importation of services. Already we have made a discussion with respect to importation of services, no? In section 7, subsection 1, clause B. In clause B we have made a discussion, right? Importation of services for consideration in the whether or not in the course or furtherance of business. That means business is relaxed there. Exception to the condition of business. Okay. In para 4. In para 4, importation of services only we are talking again. But here, relaxation with respect to consideration. Schedule 1 is that only, no? Schedule 1 is activities without consideration will be treated as supply. In that para 4, it is talking about importation of services. That means with respect to importation of services, there is relaxation with respect to consideration as well. In 7.1b, with respect to importation of services, there is a relaxation with respect to purpose, business. In schedule 1, para 4, with respect to importation of services, there is a relaxation with respect to consideration. That's what schedule 1 is, no? Schedule 1 deemed supply without consideration also supply. That means for importation of services, there is a relaxation with respect to consideration. So that means we need to study the importation of services in a consolidated manner. Consolidating 7.1b and 7.1c. Consolidating 7.1b and 7.1c schedule 1, para 4. Got it? Okay. Now we will continue that in the next class.